Okay, guys, this will be a very fast one. Currently, we are on 13 October 2022. The current time is 3:25 p.m. So we have the CPI data coming out in about 5 hours. The expectation is 8.1%. Previously, it was 8.3%. So is the CPI going to come out higher, hotter, colder, lower, whatever? We don't know. Is the market going to crash up and down? We don't really know. But here's our prediction. Number one, we have a few clues going on. The first clue is that you can see the S&P has been dropping about 6 days in a row. So most likely the CPI data might be already priced in already. Market have already crashed, and that is very clear from the NFP result last Friday. So during the NFP data, we have the unemployment rate going back down to 3.5%. And when that came out, the market immediately crashed. The S&P 500 immediately crashed. You can see the big red fat candle down there. This is mainly because when the unemployment rate goes down, people are still having their job, or the money still coming in. Most likely the inflation is going to go higher. So because of that, right, the market already pre-crashed. So if the CPI came out today to be a red hot CPI, most likely the market ain't gonna crash. But even if the CPI come out a little bit higher, maybe 8.2, 8.2, or maybe even 8.3, the market probably gonna rally. If CPI come out lesser than the forecast, like 8.0, 7.9, we may have a face rate rally all the way back to 3,700. But we still have a few more other clues that came in yesterday. So yesterday we have the PPI report coming in, and the PPI report came out to be very, very hot. The year over year is 8.5%, which is higher than the forecast, and the month over month is 0.4%, which is 0.2% higher than the forecast. So it is a very, very hot PPI data, but nonetheless, right, you don't really see the market crashing so hard. It went down a bit, but most likely it went down due to we have the what do you call that? What do you call that? The Federal Reserve meeting minute also came out yesterday. You can see that when the PPI came out yesterday, the market didn't really move so much, but the big drop actually came in after the Federal Reserve meeting minute somewhere around 2 p.m. So you can see that the market didn't really respond that badly to the bad PPI, which is usually the leading indicator for the CPI also. And on top of that, right, when we look at the bond yield, the 10-year yield is kind of like flat. So when the PPI data came out yesterday, you should expect to see a big spike in the 10-year yield, but instead what we have is the 10-year yield going back down. So it kind of tells you that maybe the market have already priced in this bad PPI or CPI number or whatever, but you can see today the 10-year yield is going back up again slightly, but still it is more of like flat. Even for the 2-year yield, it has been flat for the past 4 days. So the bond yields are not really giving us any direction, or in fact, they can be giving us a direction, and it is flat. Market is not gonna crash, or most likely market may lead higher. So this is what we are getting. But anyway, whatever we say, it doesn't matter anymore, because the CPI data is going to come out at 8:30 p.m. before the market opens. So whatever it is, if you are holding big short, big long, whatever, most likely you are screwed. So for us, Nimbus Capital, right, we are actually holding neutral portfolio. We have some long, some short, but we don't have really a market bias here. So whether market rally, market go down, whatever happen, it doesn't really matter to us. We are most likely gonna profit anyway. So from the bottom of my heart, I really pray that whatever the big position you have, the CPI and the market will goes in your direction. So thank you very much, and really, really all the best to you. May the trading God be with you. Thank you very much for listening in.